Hey there, this is Group C presenting. Today we're going to make a company analysis to evaluate the investment value of Shangri-La Asian Limited and the Hong Kong and Shanghai Hotel Limited. I'm Julian Akira.
I'm Ngaki Scarlett.
I'm Li Jiawen Cynthia.
I'm Cai Yuqi Winifred.
I'm Hao Mingjie Priya.
I'm Renye Ray.
I'm Lin Zehao Ryan.
Okay, before we start, please take a look at our content today. Firstly, we're going to make an introduction to talk about the background information of two companies, as well as making an industry analysis. Secondly, we're going to make a financial analysis to analyze the company financial performance in 2018 and 19. In this SWOT analysis, we're going to analyze the internal and external market environments of the two companies. Then in the recommendations, we'll evaluate their investment value accordingly. And ultimately, we'll state out the investment decisions in the conclusion. Now let's welcome Cynthia and Winifred to make an introduction for us.
Thank you, Akira. Let me introduce the Shangri-La Group and its background first. Shangri-La Group's primary business is related to the hotel industry, providing high-quality hotel service and accommodations. While it has a specific balance sheet, the group is also raising cash flow to cope with its strong balance sheet by issuing bonds in Singapore. The group has also launched a Shangri-La mobile app to boost online sales. And then its sales analysis. The sales revenue of Shangri-La Group is divided into four parts, namely hotel property, hotel management and related service, investment property and property development for sales and other business. The highest and most significant revenue comes from the hotel properties and shows a downward trend. On the other hand, income from investment properties rose by about 29%, especially in Mogia, which rose by about 118%. Also, property development for sales and other business increased substantially. These unusual changes are due to uncertainty of market and the influence of some small property events. For instance, the trade war between China and US, the protests in Hong Kong, all brings enormous pressure to our hotel business. And then I will show the industry analysis. It divided two parts. First is background information of the industry. Star-rated hotels has always occupied a significant market share in China. Good customer service may give them a competitive advantage. Shangri-La Hotel is highly competitive in the hotel industry and is largest luxury hotel chain in Asia, known for its meticulous service. Second is competition and major competitors. The group's excellent hotel management ability and meticulous service is the central competition of Shangri-La Hotel Groups. At the same time, the Shangri-La Hotel Group is actively expanding other projects to promote the diversification of the group's operations. Generally speaking, the development potential of the Shangri-La Hotel is high, and the development pace is steady. Competitors are many the same as five-star hotels, such as Shangri-La and other five-star hotels. Let's invite Winifred to say his part.
Thanks, Cynthia. The second company we selected is the Hong Kong and Shanghai Hotels Limited. This company was established in 1866 and already listed on the Stock Exchange of Hong Kong. It has a diversified business portfolio up to 4.9 million Hong Kong dollar, is well known by peninsula around the world, as well as commercial properties and clubs services, including the Peak Tower Thai Country Club and so on. Over the past 17 years, the company has continued to strengthen the existing quality and increased net asset value per share from 10.03 per share in 2002 to 26.15 per share in 2019. Next page, please. This is a figure of total revenue by geographic areas. We can see that Overall performance in 2019 is worse than the counterpart in 2018, decreasing about 9.44% of revenue. Hong Kong, China, and America had a relatively noticeable decline in 2019. As for Japan and Vietnam, the revenue remained unchanged. This is a figure of the company's revenue by different business. It is worth to mention that clubs and services had a steep decline in 2019, reaching 42.45%, and hotels had a little decrease, about 7.08%. Let's turn to the next page. Because the hotel is the main business area provided by the company, we will choose the hotel industry to analyze. Actually, tourism is one of the primary economic sources of Hong Kong, accounting for 5% of GDP. In the first half year of 2019, the average occupancy rate of hotel rooms was 86%, down 5% from the same period in the last year. The larger supply than demand was one of the reasons for the decline of the data. As for the Peninsula, a 5-star level hotel having a physical competition with other hotels, like Shangri-La Hotel, Regal Hong Kong Hotel, and so on. In order to improve competitiveness, they had some strategic planning. For example, large-scale decoration works and also environmental protection. All these measures aim to attract more tourists, expanding market share and improving long-term value-added capabilities. Let's welcome Scarlett.
Thank you, Winifred. Now I will talk about the financial analysis in Shangri-La Limited. First, we can see the gross profit margin is below the industry average and has diminished, perhaps due to the higher cost of goods sold. There is an improvement in net profit margin. The company considered to be a good trend. The return on assets and the return on equity seem to have increased, but both are below the industry average. That is the lower performance of company. Moreover, earnings per share is 5.4 in 2019 and 4.27 in 2019. It demonstrated a decreased net profit for common shareholders. The liquidity can be reflected by current ratio and quick ratio. Both of them show the upward trends and above the industry standard. It is considered to be good liquidity in short term. Next, please. Here we can see the activity of inventory turnover has improved and higher than industry average. The accounts receivable has decreased, but above the average. The firm's accounts payable is considered to be ascetic as is more than 1. And we can see the cash conversion cycle measure a company borrow how many days on bank. Both are negative value. The shorter the CCC, the better of company. Besides, the total asset turnover is quite stable but lower the average. Next page, please. Here, the debt ratio evaluate long-term repayment abilities. The lower, the better. However, an increased debt ratio that indicate an unsatisfactory tendency, and also the higher the debt to equity ratio, the higher risk. It may have difficulties securing additional funding. The price-earning ratio has decreased, but above the average in 2019. The variation in the P/E ratio shows the uncertainty to measure the potential earning abilities. In short, the firms required to pay attention on accounts receivable and should not add deficits until the leverage is enhanced. In addition, the company appears to be doing well, make an effort to increase investor confidence in the stability of Shangri-La Limited's future. Now, I will pass the time to Ryan.
Oh, thank you, Scarlett. And now I will analyze the Hong Kong and Shanghai Hotel Limited's performance. First of all, let's look at the gross margin. It has achieved a surprising result comparing to the industry line. It got both nearly 90% of gross margin, which is higher than the average industry line. And the net margin in 2019 was almost 2 times less than 2018. It may be due to the operating cost increased a lot in and staff cost as well as related expenses. Along with the poor economy in 2019 brought a great loss of tourism industry. ROE and ROA decreased a lot, and both were lower than the industry average line. It was a signal and the way that the company had to improve it. And the quick ratio has decreased, and it was a downward trend, right? Since it was below 1, its liquidity is unacceptable. But compared to the standard of quick ratio, it was still acceptable. Next slide, please. Okay, let's see. The activity of inventory turnover has decreased, but it was still higher than the industry average. And the average collection period rose, which means the company needs a longer time to operate money. Since the average collection period is lower, the better. So the performance of company need to be improved. Finally, the CCC was negative both in 2018 and 2019. Besides, the receivable turnover were both higher than average industry line. Yeah, so next page. Yeah, and with the debt ratio pretty much unchanged, that means the ability of repayment in the long term of company is considerable, because the lower the ratio, the better the performance. The debt to equity ratio is higher than its industry average, and it may be receive higher risks. Okay, and its earning per share is 8.3 and 13 respectively in 2018 and 2019. It significantly showed that a relatively large loss of net profit for stockholders. Moreover, the PE ratio is improved. Okay, ultimately, to conclude, the ROE and ROA should be paid more attention by the company, and it was a way that the company could reduce the great decrease in operating cost to earn a better profit. A knowledge of the past is crucial for understanding the future. Therefore, the company has to make an effort on operating money and inventories so that it could get a higher and better margin profit. And thank you. I will pass to Freon.
Okay, thank you, Ryan. Now it's my turn to illustrate the SWOT analysis of Shangri-La Limited. First one is strengths. In the beginning, it has a good performance in the liquidity according to our financial analysis. Secondly, it has a good management system. For example, there is a training program for all employees. So for customers, we can enjoy good service from all employees. In addition, it has a complete service system. For example, there is a vacation trip service, which will provide any information about our journey, like air ticket, and so on. The most different one is that it has a diversified designs in different locations in order to match local culture. For example, Beijing has some Chinese traditional architecture, so hotel will decorate under this style. Then its weakness. Shangri-La Limited is focusing on hotel and resort, so the coverage is too limited. So it is very hard to make a breakthrough. In addition, because of their main business, there are a lot of decoration and we need to make maintenance of them each year. For example, swimming pool and gardening. Then it has a better financial performance in profitability. Next page. For opportunity, now is a slowdown economy, so governments wants to reduce the interest to stimulate the economy. Therefore, customers will reduce saving because not much interest they can lend, and they will choose to consume or invest. A part of them likely will invest us for company. We can reduce the stress from interest payment. The last one is threat. Now, because of COVID-19, hotel and resort business are not good because people will avoid some places with a high density of people like Hong Kong. In addition, as news released by Harvard University, we have to keep social distancing until 2020. So our business will not be good in the future. That's all SWOT analysis about Shangri-La Limited. Next part is for Ray.
Okay, thanks, Freedom. Now I will analyze the Hong Kong and Shanghai hotels through SWOT and analyze. I'm going to identify the internal factors in this slide. For the strength part, the company's strength is brand awareness. The Hong Kong and Shanghai hotel has gained a lot of reputation and established a good brand. As the subsidiary of the Hong Kong and Shanghai Hotel, the Peninsula Hotel was the first brand in which all hotels were rated as 5-star by the Forbes Travel Guide. Also, the Peninsula Hotels Hong Kong has been regarded as Grade 1 historical building. Because of this, consumers have confidence that they will have a good service experience and stay in a comfortable room. The second point is about the weakness. The Hong Kong and Shanghai hotels aims to provide a luxury experience for customers. However, its target strategy may restrict its customer group. Here is a case from Agoda. There are 3 hotels which are all located in Tsim Sha Tsui, and they have customer rating. Although the Peninsula hotels have the highest score, but its price is also much higher than the other 2, about 4 to 5 times. So as a result, you can find that there is a big difference in the number of reviews. Next page. There are 2 parts to analyze the external environments. The plan of the Greater Bay Area is the company opportunities. The plan illustrates that Hong Kong is the tourist city which will attract many overseas travelers. Meanwhile, there are some new convenient measures for entry and cross-border infrastructure like Hong Kong Station of XRL. It can be expected that the number of visitors from other cities in the Greater Bay Area will increase. When more and more people come to Hong Kong, the company can let them know its brand and increase its influence on the international hotels brands. Finally, a downturn in the tourism industry is the threat for the company. The hotel industry is correlated to the tourism, and social, environmental, and political factors will make an influence. For example, as the current epidemic of COVID-19, the number of people going out decreased dramatically, especially for the long-term travel. Meanwhile, most government issue regulation restricting entry and advise people to stay at home. Tourism has been hit hard, and people unsubscribe their flight tickets and hotels. Okay, let's welcome Akira.
Thank you, Ray. Now it is my turn to make some recommendations to evaluate the investment value in the long run. Firstly, we're going to evaluate the investment value of Shangri-La Asia Limited. According to the introduction, the operation strategy of Shangri-La is to provide high-quality service for a long time and depends much on the meticulous system of management. But under the current market environment, which is threatened by the coronavirus and low tourism volume, it is fairly risky to invest in the company with a very high operating cost. Then, referring to the financial analysis, although the liquidity is considerable, but only measures the short-term situations. More importantly, the debt ratio shows an undesirable trend and presenting a high risk in securing the additional funding, which is a long-term issue. For the investors' confidence presenting by PE ratio, it reveals uncertainties in the company's long-term potential earning abilities. In this case, we think that the Shangri-La Asia Limited is not a very good choice for long-term investment for its high risk and uncertainty. Then, for the Hong Kong and Shanghai Hotels Limited, it is a kind of different image. For its operation strategy, it chooses to expand market share and improve the long-term value-added capabilities, which is essential for surviving in the current market environment under the current threats. For the financial performance, the short-term liquidity shows a downward trend but still acceptable, and the debt ratio also shows an acceptable long-term repayment abilities. The situations of PE ratio reviews an improvement in the market expands since it is increased in 2019. In this case, we think that the Hong Kong and Shanghai Hotels Limited shows more potential in a higher investment value in the long run. Last but not least, let me provide a wrap-up of our presentation today and state out our investment decisions. The data of our research is mainly collected from 2018 and 2019 financial reports of the two companies. The analysis is conducted by accessing the balance sheet and financial statement of the two companies, as well as a research for the internal and external market environments, aiming at providing a clear operation trends for investment decision. All in all, based on our study, we decided to make the Hong Kong and Shanghai Hotel Limited as our investment choice in the long run. And these are the references of our research. This is the end of our presentation. Thank you for listening.
Thank you.